Howdy folks. Most traders lose money. That's just a fact. I think the number is around about 75 to 85%, but it could be higher. Most of the brokers will tell you that. And there are really only 7 reasons why traders lose money, and I've written them down in this little tip sheet. And this really forms the foundation or the basis for what I'll be teaching in the Swing Trading Blueprint course. If you can master these 7 things, and really master them and apply them with discipline, you should be successful in your trading. There's no reason why not. But most people don't master these, and a lot of people don't pay much attention to them either. I promise you, if you can master these, and it's not rocket science, not difficult. The concepts are not even difficult. The application of these is not difficult. So let's go through them. Master risk management. That's number 1, and never risk more than 1 to 2% of your total capital. That's just a very basic guideline. There are lots of nuances to that, including the next step, using hedges and stop loss orders to protect your capital. Either hedge against your positions or place stop loss orders. I prefer to use hedges, and it's one of the things I'll be teaching in the course. Gives you a lot more flexibility. It eliminates a lot of the psychological problems that you'll have in your trading, and it gives you enormous control over your trades. We'll be talking a lot about hedging in the course. Trade with a plan. Now, whether your plan is to pick the top or the bottom, so the trading plan, what's it based on? Is it fundamentals, technicals? What sort of things are we looking at? Moving averages, horizontal lines? What's your plan? I'll be teaching you my plan, how I trade, and really the tried and tested methods that many bank traders, institutional traders use themselves, and that I've been using for over 23 years. And I've used to trade for a bank, and I've run my own hedge fund using exactly the same things I teach in this course. So understanding market trends, once again, how you determine and define the market trend is super important. You might be looking at fundamental aspects of the economy. You might be looking at just the charts, or you might be looking at a combination of both of them. And you might also be looking at other highly correlated markets. To give you a clue, I use a combination of all 3, and I teach all 3 in the course. How to identify and understand the trend. Avoid overtrading. That's another thing a lot of traders do. They tend to overtrade, look for trades too frequently, too often. I see it all the time. So all of the numbers above that, number 1, 2, 3, 4, 5, are all there not only to help you trade and make money, but also to prevent you from getting emotionally involved in your trade, whether that's positively or negatively. So these tips, and I'm going to say it outright and totally confidently, 100% confidently, and I very rarely say that, but what I'm going to say is that if you can manage, understand, and manage these 7 different tips, and as I said, they're not rocket science. You can see they're very simple. In fact, you probably know them already. You've probably been told these a million times, but how to apply that within the context of trading in different markets and different instruments is not as easy. Well, I hope you found that useful and interesting, and it really is as simple as this. Keep these 7 tips in mind, apply them rigorously, and come across the course and learn how to do it. There's a link below, Swing Trading Blueprint. Can't wait to see you there. Take care.